Hello, everyone. Thanks so much for taking the time to come to our webinar today. We'll be covering pressing topics impacting businesses, including lending options for businesses that are impacted by coronavirus, tax relief available, and other immigration and legal relief to help your business during this uncertain time. If you have a question at any time during the webinar, feel free to type it into the chat box. For more resources to help your business during this pandemic, please visit our website's COVID-19 Resource Center. I'd like to start off by introducing our panelists for today's webinar. We've got a wonderful panel of CPAs and attorneys from our Santa Clara office. Today we've got our host, Kisle Banka, partner and CPA, Gershan Chugh, attorney, Subhash Desai, senior partner, Khushbu Doshi, CPA, Asha Inamdar, CPA, Jyoti Javeri, accounting team lead, Pooja Shrivastava, senior accountant, Bhakti Suba, partner and CPA, and Vikram Subramanian, attorney. Thank you so much for joining us today, all of you panelists, sharing your time with everybody. And now I'd like to hand it over to our host, partner and CPA, Kisle Banka. Kisle?
Thank you, Sessa. Thank you, everyone, for joining the call today. Navdeep could not make it, and we have a whole lot items to cover. So we'll get started with EIDL loan. So our senior partner, Bhakti Subha, will cover the EIDL. Bhakti, you will talk about EIDL?
Sure. Thank you, Kisle. Trust everyone's keeping safe here. So there's a lot of noise that has been going on around the EIDL loans. Let me tell you about the EIDL loans briefly today. The CARES Act had appropriated $349 billion for the SBA programs, which is the PPP and the Economic Injury Disaster Loan Program, EIDL. The initial funding is depleted, and the second round of funding has already been approved, which is for $480 billion. EIDL is a low-interest federal loan funded by SBA to the businesses suffering due to the pandemic COVID-19. EIDL is available to small businesses and private nonprofit organizations with 500 or less employees, self-employed individuals, and independent contractors. These loans are also available to businesses in certain industries with more than 500 employees, subject to the SBA size standards, which is based on the average annual receipts or the average number of employees. The loan can be applied during the calendar year 2020 and has to be applied directly with the SBA. The loan is available up to $2 million at 3.75% interest for the businesses and 2.75% interest for nonprofits. It is a 30-year loan, and the first repayment can be deferred for 12 months, though interest will be accrued. These are essentially working capital loans that are to be used for paying expenses which are eligible expenses like payroll, rent, mortgage, and others. These funds cannot be used for expansion of businesses. 20% or more owners must give personal guarantee, though loans up to $200,000, there is no personal guarantee needed. The CARES Act also provides for the emergency advances, which is the $10,000 advance. We are getting a lot of questions around this. The amount of advance is $1,000 per employee, capped at $10,000. The advance has to be applied for at the time of the EIDL applications. If the advance is used appropriately, then it will be forgiven. Yes, the advances are taking time to be funded than initially what was expected, but they are starting to come in. For some of the clients, I've already started getting these advances. In general, there has been a delay in processing the EIDL loans and advances due to the overwhelming applications being received and the PPP loan funding being given a priority. We can call the SBA to check the current status as well. Just one important thing to note here is that the application number has to begin with number 3. And if that's not the case, you may have to reapply. Probably you're using one of the old application forms. Business can apply for both EIDL and the PPP loans as long as they are used for different purposes. There is a good news for the businesses that have existing SBA covered loans. Under Section 1112 of the CARES Act, the SBA will pay principal, interest, and any associated fees for a period of 6 months, beginning April 1, 2020. SBA will also make payments for these covered loans between April 1st, 2020 and September 27th, 2020. These repayment of loans by the SBA are free payments and not treated as income. The EIDL loans are not available to 501c3 organizations, with an exception to the faith-based organizations. Faith-based organizations can apply for the EIDL loans, the terms for which will remain the same as the other private nonprofit organizations. So concluding here, Kisle and everyone, EIDL loans are currently getting delayed, but the business will start to see some communication from these SBA people. SBA will also start taking new applications as the funding is already being approved. Thank you, everyone. Back to you, Kisle.
Thank you, Bhakti. We'll now talk about PPP loan. Almost all businesses, especially the small businesses in the US, is talking about PPP loan. And there are a lot of anxiety about business owners regarding this loan. And they have many questions regarding foreign ownership, foreign affiliates, and whether VC funded company are eligible or not, whether nonprofit can apply or not. So we have our senior team lead Jyoti Jhaveri from Santa Clara office, and she's going to talk about PPP loan. Jyoti, yours now.
Sure. Thank you so much, Kisle. Thank you all for attending this webinar. The Paycheck Protection Program is another stimulus grant under the CARES Act. It's a loan initiative designed to provide the funds to small businesses to retain employees through this COVID-19 crisis. As we all know, payroll is the biggest expense and the #1 pressure for most businesses right now. Congress has enacted PPP loan program as a great option to keep employees on payroll and avoid terminations and lays off. The PPP loan is available for any small business with less than 500 employees that was in business on or before February 15, 2020. They could either be an S Corp, C Corp, LLC, sole proprietorship, or independent contractor. This program is also introduced by SBA, but unlike EIDL, these need to be applied through banks or lenders. Lenders who are authorized to make loans under the existing SBA 7A loan program are automatically eligible to participate. Other lenders have also been added by the Department of Treasury and SBA, including fintech companies such as PayPal, Square, and Intuit, etc. Next question that would come to our mind is, how much can I apply for? The answer is formula driven. The amount you qualify for is based on 2.5 times your average monthly payroll cost. Your average monthly payroll is calculated based on your prior 12-month payroll costs. However, the total loan amount is capped to a maximum of $10 million. So for computing the payroll cost, we would include monthly payroll, employee benefits, state, local payroll taxes. However, the salary amount over 100,000 is not considered as payroll for any employee. Once the loan is approved, you must utilize at least 75% of the loan proceeds for payroll, and balance 25% can be used for making payments like rent, mortgage, and utilities. The PPP loan could be availed at an interest rate of 1% for a term of 2 years, and it also does not need any collateral or personal guarantee. SBA guidance provides that the foreign-owned companies with US employees can apply for PPP loans, provided they otherwise meet the eligibility requirements. But in an interim final rule, the SBA has indicated that an entity generally is eligible for PPP if it, combined with its affiliates, has 500 or fewer employees whose principal place of residence is in United States, meaning it would consider employees only within United States. For venture capital funded companies, there is nothing in SBA's affiliation rules that outright prohibits these companies from receiving PPP loans. But if a VC or a PE fund is deemed to be affiliated with a company, then all of the portfolio companies that are controlled by the fund may come into the affiliation equation. And then they would need to see if they're still eligible under the size eligibility requirements of no more than 500 employees, inclusive of affiliates within USA. Non-profit entities are also eligible for PPP loan if they meet the program's requirements and if they are classified under the tax laws as a tax-exempt non-profit organization described in Section 501c3 of the Internal Revenue Code and under Section 501c19, which is tax-exempt veterans organization. Lastly, as you may all know, the Paycheck Protection Program exhausted nearly $350 billion, which was set aside for low-interest loans to small businesses in just 14 days. So Congress reached an agreement and Senate passed the bill on Tuesday to add an additional funding of $310 billion for the PPP loan. This is great news for the ones whose PPP application has not yet been processed and still stand a chance to avail of this loan. I hope this information is useful and helps you in this extraordinary times. Over to you, Kisley.
Thank you, Jyoti. Thank you very much. Next topic is about forgiveness of PPP loan, and I'm going to talk about it. Getting PPP loan is very important, but forgiveness of PPP is equally important. If you don't plan for it, you'll find the liability sitting in your balance sheet immediately after 8-week period is over. Many of you know that PPP loan is forgivable as long as loan amount is spent during 8-week period in salary, rent, utilities, and mortgage interest. This 8-week period will start from the day you will receive the fund in your bank account. Out of total loan amount, at least 75% money should be spent on payroll expenses. We have received a lot of queries if salary paid to H1 and L1 workers will be part of this forgiveness amount. Yes, they will be part of the calculation. However, amount paid to 1099 and foreign workers will not be considered for this calculation. Reduction in forgiveness. This loan forgiveness can be reduced for two reasons. First, it can be due to reduction in number of employees. For this purpose, we need to compare the average number of employees during 8-week period with employee count for a specific period during 2019 and 20. If the reduction in number of employees in 8-week period, the forgiveness amount will be reduced proportionately. Secondly, it can be reduced if their pay cut over 25%. So this requirement will be individually assessed for every employee that did not receive more than $100,000 in annualized pay in 2019. If the employee pay over 8 weeks is less than 75% of the pay they received during the most recent quarter, the forgiveness will be reduced for the difference in amount. A lot of clients have asked about how the taxability of loan forgiveness will work. Usually, any cancellation of debt become income for the company. One good news from the tax front on forgiveness. The forgiveness amount under PPP plan will not be a taxable income for federal income tax purpose. We still have to see how the taxability will work for state income tax. Hopefully soon the state tax authorities will come up with some guideline. So you have to plan from day one on PPP, and you need to create documentation as you go. So the companies can apply for forgiveness after 8-week period is over with the bank and should be ready with a certain document. For example, documents verifying their full-time equivalent employees on the payroll and their pay rates, payroll reports, Form 941s, document verifying any retirement and health insurance contributions, document verifying your eligible rent, utilities, payment, cancelled checks, and payment receipts, etc. There could be some tax planning opportunities. As you know that 8-week period will start from day you receive the fund. It is quite possible that your 2 months of your payroll cycle will not fall into this period. So you may have to work around with your payroll cycle and probably adjust a little bit to cover the maximum payroll. You can plan to prepay some of the bonuses, commissions that are due in coming period. Ensure that payroll taxes are debited from your bank account on time during this 8-week period. you may have to work with your payroll agency. Ensure that your rent, utilities, and other eligible expenses are paid on time, covering the 8-week period. This mostly covers my forgiveness part. We'll move it to next topic, discussing about different payroll tax credit available. And there are many, and Asha is the senior team lead, and she's going to cover about various payroll tax credits that our clients can avail. Asha, to you.
Thank you, Kisley. The Employee Retention Credit under the CARES Act is a fully refundable credit that covers up to 50% of payroll per quarter, including health benefits for each employee. The qualified wages should be for the period after March 12, 2020 and before January 1st, 2021. The credit is allowed against the employer contribution of Social Security taxes. The maximum compensation amount for this credit is capped at $10,000, essentially making the credit up to $5,000 per employee. Any excess credit exceeding the liability for Social Security taxes for the quarter is refunded, hence fully refundable. To be eligible, employers should have faced some kind of economic hardship as a result of partial or a full suspension of operations or a significant decline in gross receipts in the pandemic. Significant decline means a decline in a period beginning with a calendar quarter of more than 50% compared to the same quarter of the previous year and ending in a calendar quarter with gross receipts exceeding 80% of the gross receipts for the corresponding previous year quarter. Employers having more than 100 full-time employees in 2019 can claim credit for wages paid to only those employees that did not work during the hardship or had reduced hours. Employers having 100 or fewer full-time employees in 2019 could use the deduction even if they weren't closed or even if the employees were not working during the hardship timeframe. Credit can be availed as long as the benefit under the PPP loan is not claimed. Credit should be claimed on Form 941. Now note that 50% of the qualified wages paid for the period from March 13th, 2020 to March 31st, 2020 should be included along with 50% of the qualified wages paid for the second quarter of 2020 on Form 941 for the second quarter of 2020. The credit cannot be included on the first quarter of Form 941. Now let's look at the tax credit for paid sick leave or FMLA under the FFCRA Act. An eligible employer cannot receive credits for qualified leave under the FFCRA Act and the Employee Retention Credit under the CARES Act for the same wages. A refundable payroll tax credit equal to 100% of the emergency paid sick leave or family medical leave paid for each calendar quarter can be availed. The credit is to be claimed against employer's share of Social Security taxes only, that is 6.2%, and on employer's share of Medicare taxes, that is 1.45%. If credit is more than allowable limit, then the excess is refundable to the employer, even if it is over and above the payroll tax liability for that quarter. The qualified sick leave and family leave wages should be paid for the period from April 1st, 2020 to December 31st, 2020. Self-employed individuals can also claim self-employment tax credit for the same period, and government employers are also eligible. The emergency paid sick leave is limited to 10 days per employee for this credit. The qualified family leave is capped at $200 per day and $10,000 per employee for all calendar quarters. Let's take a look at the deferral of certain payroll taxes under the CARES Act. This is a great provision wherein 50% of the employer portion of the Social Security taxes and Medicare tax liability of eligible employers for periods from March 27, 2020 to December 31st, 2020 can be deferred all the way until 31st December 2021, and the balance 50% can be paid the year after, which is until December 31st, 2022. Employers receiving the PPP loan can also continue to defer the payment of payroll taxes according to these provisions only until the loan is forgiven. No special election is needed by the IRS for claim of this credit. Just inform your payroll processor. That's it from me, Kisley.
Thank you, Asha. So next we will talk about some other loan programs. So in addition to PPP and EIDL, there are many programs offered by federal, state, and local counties. Yesterday, I heard that Santa Clara County has a $500,000 fund to help small businesses. But among all these other programs offered, the most notable program is Main Street Lending Program. And for large businesses, the program under CESA. So Pooja Srivastava, she is MSc in taxation and senior accountant in our office. She's going to cover and talk about these loan programs. Pooja, on you.
Thank you, Kisley. I'm going to take you through the comparisons. As Kisley said, these popular programs that we have, the PPP and EIDL, apart from that, there was an additional guideline that was given by the Federal Reserve on the 9th of April. And these are talking about these two programs, the Main Street and the Coronavirus Economic Stabilization Act. I would like to take you through the differences as per the slide. The conditions under which these two programs will be eligible for you is you should have less than 10,000 employees or less than 2.5 billion in 2019 revenue. The CESA is specifically designed for the aviation industry mostly, and also related to the maintaining the national security. The interest rate moves anywhere between 2.5% to 4% for the Main Street lending, and up to 2% for CESA. The loan term is pretty similar. It's 4 years for Main Street and 5 years for CESA. Here in the Main Street program, the minimum loan that you can that you should have is about 1 million, and you can go up to 25 million. CESA has no minimum or maximum requirements. There are, however, some restrictions for both of these programs. You need to retain 90% of the workforce as of September 30th of 2020. There are restrictions on the compensation for the executives, and there is additional requirement to not offshore the jobs. And there is a specific timeline for that. When you move to CESA, it's the same thing. There is an executive compensation restriction, and you're supposed to maintain the same levels of employment at least up until 30th of September. The deadline to file these applications for Main Street is the 30th of September, and for CESA, 31st of December. If you've already applied for the PPP, what should you do? You can still go ahead and apply for the Main Street lending program. However, for the CESA, you will not be able to apply. None of these programs have loan forgiveness. The application process is not yet begun. However, the deadlines have been given for both. So, Kisley, that answers the question.
Very good, Pooja. Thank you very much. So we'll also cover some tax deadlines. So Pooja, you also wanted to differentiate PPP and MSL?
Yes, so we are also getting a lot of queries about what's happening to PPP now, and there's this new loan that has come up. There's not much in the guidelines for that. So here's a little bit of a comparison between the PPP and the Main Street lending. The interest rate of the PPP is up to 1%, whereas for the Main Street is 2.5 to 4%. The term is 2 years. The term for the Main Street is 4 years. There is no minimum loan for the PPP, and we all have worked through it. A lot of you have already applied to it. Whereas for the mainstream, it's about $1 million, which is the minimum, and you go above that threshold. The maximum loan for the PPP is 10 million, and for the Main Street is 25 million. For PPP, of course, we all know, and there's going to be some heavy duty work on the loan forgiveness piece, as Kisley has mentioned, but there will be no loan forgiveness for the Main Street. The company size is 500 and fewer employees, whereas for the Main Street is 10,000 employees. And that covers my topic. Thank you so much for listening.
Thank you, Pooja. So next we will briefly discuss about different tax deadlines and deductions and some good news on the net operating loss front. In 2018, some of those carry back of NOL were suspended. Now, under this new program, we can carry back some of those NOLs. So Khushbu Doshi is a senior CPA and team lead, and she'll talk about tax deadlines and deductions.
Thank you, Kisle. Good morning, everyone. Hope you're getting some useful information from us. I would like to start away with the filing deadlines. The Treasury Department and the Internal Revenue Service announced on March 21st that the federal income tax filing due date is automatically extended from April 15, 2020 to July 15, 2020. About 37 states have adopted same filing date of July 15, 2020. Other states with different deadlines are Virginia, New Hampshire, Mississippi, Iowa, Idaho, and Hawaii. Taxpayers can also defer federal income tax payments due on April 15, 2020 to July 15, 2020, without penalties and interest, regardless of the amount owed. This deferment applies to all taxpayers, including individuals, trusts and estates, corporations, and other non-corporate tax filers, as well as those who pay self-employment tax. In response to the coronavirus pandemic, the tax deadline for 2020 has been extended until July 15th for IRA as well. This gives taxpayers extra 3 months to make IRA contributions for 2019. Taxpayers can make a SEP IRA contribution as late as the due date, which is including the extensions of the return. So in a typical year, if you file for a 6-month extension, you would have until October 15 to make a SEP IRA contribution. The due date for filing FBAR remains April 15th, but pursuant to previously issued guidelines, an automatic extension is granted until the October 15th of every year. Regarding the NOLs, it's very interesting to know that businesses and individuals who own pass-through entities that incur NOLs in the tax year 2018, 19, and 20 can carry back those to offset the taxable income for a period of 5 years preceding the year in which the loss was generated. Additionally, businesses can elect to exclude from the carryback period any years in which the 965 transition tax is applied. The CARES Act now also allows 100% of NOLs to be used to offset taxable income. This amendment applies to tax years beginning before January 1st, 2021. Another good news that I would like to share is about the faster depreciation that you can claim. The CARES Act now allows for faster depreciation on qualified improvement property, as it is now being qualified as a 15-year property with eligible for bonus depreciation. Earlier, this used to be depreciated over a 39-year life of the building as set forth in the TCJA. This provision may allow taxpayers to file amended returns and claim refund for the year 2018 and 2019 tax years if they placed such 15-year property in service during those years. Additionally, it also encourages taxpayers to make needed improvements in the coming years as the economy recovers from the COVID-19 pandemic. Another good news is the utilization of minimum tax credits. The TCJA eliminated AMT tax for corporate taxpayers the tax years after 2017. Taxpayers were eligible to offset their income tax liability by the amount AMT and receive a refund of 50% of the excess for the years 2018 to 2020, with any remaining amount to be refunded in 2021. The CARES Act has changed these rules to allow a refund of any excess AMT credits to be utilized immediately in 2019. This is also an election that can be made to have all the credit refunded as a part of your 2018 tax return. I'm sure this will create a great benefit for a lot of the clients who are having AMT credits carryovers. Last but not the least, I would like to discuss the tax-free deductible payments under Section 139. Pandemic, now an employer can pay workers to cover reasonable necessary personal living expenses incurred resulting from COVID-19. Reimbursable expenses could include unreimbursed medical expenses, funeral expenses, increased utilities, home office expenses such as enhanced internet connections, computers, laptops, printers, office supplies, and increased childcare expenses. Since most of the people are working from home in these times, a lot of these payments can be used as eligible tax-free deductible payments. You can always reach out to us to get more clarification on any item you would like to discuss, and we can take it offline and guide you in the right direction. That's it from me. Thank you, Kisley.
Thank you, Khushbu. So part of the CARES Act was to support individuals with stimulus checks. Many people have, sorry, Khushbu, actually, you have topic left or you're done?
I'm done.
Okay, next slide, please. So many people have already started receiving the stimulus checks. And Subhas Desai is a senior partner in Santa Clara office. He's going to talk about status of stimulus checks and a couple of other topics.
Thank you, Kisley. As you all know, economic impact payment is also commonly known as stimulus checks. Millions of Americans have already received these payments. And IRS continues to calculate and automatically send the payments to most eligible individuals. The payments are made based on two major criteria: income and filing status. Individuals filing as a single with AGI under $75,000 will get a full $1,200 stimulus payment, and it phases out at $99,000. Married filing joint receives $1,200 per adult and $500 for each dependent child, provided the AGI is under $150,000 and it phases out at $198,000. The cash payments are based on either your 2018 or 2019 tax filing. Eligible retirees and recipients of Social Security, SSDI disability benefits, survivor benefits, railroad retirement benefits, and veteran benefits, as well as individuals who do not make enough money to normally have to file a tax return, such as recipients of supplemental security income known as SSI benefits, are also eligible for the payments. US citizens, permanent residents, and individuals filing resident tax returns such as H1 and L1 visa holders are eligible for the payment. However, the dependents with ITIN and not having a social security number are not eligible. Stimulus money is generally not subject to reduction or offset to pay back taxes or other debts owed to the federal government. However, if you owe child support, the IRS can use the stimulus check money to pay the arrears. If your child support debt is greater than the stimulus check amount, you could end up missing out on the stimulus payment entirely. Payments will be made throughout the rest of 2020. If you don't receive any payment this year, you can also claim it by filing a tax return for 2020 tax year. Thank you, Kisley.
Thank you, Subhas.
Another question we have is retirement benefits. The law changed, the CARES Act allows people to borrow or use the fund from the retirement savings account. You can borrow up to $100,000 for retirement accounts without a 10% penalty. Pay the loan back in equal installments in 5 years with 5.25% interest. You can take penalty-free early withdrawal of up to $100,000. And if you want, you may return it within 5 years, or you may just want to keep it. The required minimum distribution has been suspended for the year 2019. The distribution taken by April 15, 2020, and for the year 2020, which is due by April 15, 2021. So those things have been suspended. The individual IRA account, if you want to take part in IRA contribution, you can still do that until July 15. It is extended from April 15, 2020 to July 15, 2020. Thank you, Kisle.
Thank you, Subhas. Besides tax, stimulus, and loan, we also wanted to touch base some of the immigration and employment law related issues. We have good.
Student loan, there are two major changes to student loans. Number one, if you have a federal student loan, you can suspend your monthly payments through September 30, 2020 without accruing any interest. This year, the employers may choose to make tax-deductible contribution of up to $5,250 towards your student loan payments, and you will not have to pay taxes on this contribution. Insurance. Many of the businesses, they have various different insurance policies they keep. You may want to check your various insurance policies to see if you can be compensated for some losses. Please evaluate how your operations and revenue have been affected and analyze whether any of your insurance policies provide any coverage for the losses, like business interruption coverage, commercial general liability, director and officer D&O, error and omission E&O insurance, workers' compensation, and short and long-term disability insurance. This may help you offset some of the operating cost. So please look into your policies and analyze them. Thank you, Kisle.
Thank you, Subhas. We have Gursan from our immigration team. He's corporate attorney in our office, and we are also getting a lot of questions around immigration. So Gursan will talk about some of the issues like working from home and some other topics which is important. Gursan, to you.
Yeah, thank you, Kisle. Yes, I'll be talking about a few H-1B related issues during this COVID-19. The first question is regarding H-1B employees working from home due to COVID-19. So this is usually allowed as long as it's within the same MSA, which is a reasonable distance from the address listed on their H-1B worksite petition. Usually it's around 50 to 60 miles. So as long as it's within that, this should be okay. A related question to this issue is the LCA requirement. So you can meet this requirement if you post the LCA at home or the employer's electronic board, intranet. You can send out the LCA to all the employees using the emails that you use for job recruitments. So this way you can meet the LCA requirement as well. The next question is regarding the short-term placement option. This allows employees to work outside normal worksite for up to 30 work days without filing any amendment. The only thing that you need to remember about this is 30 work days, so it's a little over a month. So this allows employees to work outside normal work sites. The next question was regarding the LCA requirement, which I kind of covered with the first question. So the employers can meet this requirement by posting it, like I said, on job opening websites, their websites, email, internet, electronic newsletter. You can also take a printout and put it in your public access file. The Department of Labor has also given a 30-day extension for posting LCAs at new work sites. So we can, Kisle, if you can move on to the. So next we're going to talk about sick leave that if an H-1B employees can take during COVID-19. Employees can take sick leave. The only thing that you have to remember is the request has to come from them and it cannot be through the employer, because that can be masked as a benching. So as long as the request is coming from the employee, we recommend that you keep a record of the request, and as long as it's coming from them, they can take sick and family leave during this COVID-19. Okay, one of the main questions during this time is what to do with H-1B employees if you can't afford to pay them, or you want to change their hours, or you want to terminate them. The first option would be you can amend the current H-1B petition to reduce the H-1B worker's salary. So you could do this by filing a petition, but you have to remember the H-1B salary has to be same or more than the prevailing wage for the position. And the pay cut would be effective once you file the amended petition with the USCIS. So that's one way to do it. The other way to do it would be to also file and reduce the number of hours to part-time. But even with this option, you would have to match or exceed the position's prevailing wage. Can you guys hear me now? Hello? Can you guys hear me?
Yeah, go ahead, Gursan.
Hello?
Yes, Gursan, go ahead.
Okay, yeah. Can you guys hear me now?
Yes.
Okay, sorry about that. I think my internet was disconnected. So I believe I was talking about the options you have in terms of employee. There's also a temporary option where you can do a pay cut from across the board for all your employees. This would mean H-1B and non-H-1B employees. You can cut their salaries and hours for all the employees, but this is a very temporary option, and we only recommend it for a period of time. And this would be, or like I said, for non-H-1B and H-1B employees. The hours down, you can cut down from 40 hours to 35 hours. And if you want to simplify the employee, then if you lay off the H-1B employee, you must provide them with return transportation to their home country. And the laid off H-1B employee has 60 days to make plans and arrange their affairs for departing the United States. The only issue that's coming up now is, for example, if the employee cannot during lockdown, what we are recommending is that they file a change or transfer to a B2 visitor visa. This allows them to maintain their status and also show in good faith in the future that they did take steps to change their status and did not remain here on unauthorized stay. The next question is, does an H-1B pay an H-1B employee? Yes, they would have to pay the employee, even if it's a shutdown at collection. If they cannot move him through an amendment, they'll have to pay him. Otherwise, it could be used, it could be benching. The next question, if they cannot, they must leave, can they stay in the U.S. until the ban for travel is lifted? Like I said, in this situation, we are recommended that they change their status to B2 visitor visa, and this will show a good faith attempt on their part in order to an effort they made not travel back to their home country. The companies can continue with the green card processing. The only thing in this situation they have to remember is when you file a perm, there's a that asks if you had any layoffs in the company within the last 6 months. So during this period, if you did have layoffs, this could have problems in the future when you do file a perm. Then it would depend if was laid off, what perm you're filing for. So it would be very case dependent. And this is to keep in mind during this process. But besides this, green cards can be processed as usual. In terms of reasonable accommodations, one of the accommodations that they made was US has made is 30 days extensions for the LCA postings to be posted at the new work site. Also, in terms of perm recruitment, this recruitment usually used to be done within 180 days. The perm has to be filed within recruitment. They have allowed another extension for 60 days for this. So essentially, this means that if your perm was to be filed, you have another 60 days to file it. And in terms of audit documentation, response to notice of deficiencies, submissions of recruitment reports, they have also provided an extension. So if your deadline fell between March 13th to May 12th, they have provided an extension for that. So, but you still must file it no later than May 12th.
Thank you, Gursan, for covering immigration topics.
Thank you.
Our last speaker is Vikram Subramanian. He is a corporate attorney, and he will talk about some of the employment-related issues. Vikram, go ahead.
Thank you, Kisle. First of all, I'd like to thank everyone for joining today. I see that we have a lot of attendees, and I really think that's great. So the first issue is, what are the reasons an employee can take time off for COVID-19 in this context? And in this context, an employee qualifies for paid sick time if the employee is subject to a government quarantine order related to COVID-19, has been advised by a doctor to self-quarantine, or is experiencing COVID-19 symptoms and is seeing a doctor, is caring for an individual subject to a quarantine order, or is caring for a child whose school or daycare is closed because of COVID-19. Another issue that employers are having to address nowadays is whether employees can use sick leave before the FFCRA applies, and can they use PTO as well? The short answer is that employee affected by COVID-19 has the right to use paid emergency sick leave under the FFCRA before using any PTO. Furthermore, an employer cannot require the employee to use PTO first before using sick leave. We can go ahead and move on to the next slide. Thank you. Another question is, what is Emergency Paid Family Leave Act under the FMLA? This new law requires employers to provide employees the ability to take leave to care for a child who's out of school or whose daycare is closed because of COVID-19. Also, Emergency Paid Family Leave Act under the FMLA can be used consecutively with paid sick leave whenever applicable. Another question that is occurring nowadays is, how much do employees receive for FMLA leave? An employee is eligible to receive a total of 12 weeks leave, which includes 2 weeks paid by the employee using their PTO or sick leave, and the remaining to be paid by the employer, equal to 2/3 of the employee's regular rate with certain caps. We can go on, yes. And the next question is, which employees qualify for unemployment benefits? The general rule has been that state law generally governs and makes a determination about who qualifies for unemployment benefits. But at this time, most people will qualify, including contractors and others who just simply cannot find work. The federal government has already allocated over $1 billion in aid to state governments to support unemployed persons. There's no waiting period. Employees who've been laid off don't even have to go in person, and that's partly to prevent the spread of COVID-19, of course. And there are no work search requirements to even qualify for unemployment benefits, because the government and everyone's aware that this pandemic has caused many people to get laid off unnecessarily. And lastly, laid off and furloughed employees qualify for unemployment benefits. They can receive benefits from the state based on a percentage of their salary plus $600 a week from the federal government for 4 months. And the last issue, and perhaps maybe the most important one from a litigation and legal standpoint, I feel, is how can businesses address or utilize the force majeure contract and clauses to protect themselves during the pandemic? As many of you may not know, the force majeure clause is designed to free a party from a contract due to unforeseen events beyond that party's control. So in this context, we would argue that COVID-19 will qualify as an unforeseen event outside of any party's control or advance notice of. Now, even if a party's contract does not mention COVID-19 by name, other similar words used in the clause, such as pandemic, catastrophe, disaster, act of God, should readily suffice. So this pandemic outbreak would constitute a trigger of the force majeure clause in our opinion. The affected party would just have to show that it's impossible to perform the essential terms of the contract and prove that non-performance was unforeseeable and outside of its control. You can also use doctrines saying commercial impracticability, frustration of purpose to excuse the performance. Coincidentally, I'm actually helping a client on this very issue right now, and I found some very useful case law doing legal research on this subject that can help anyone addressing this issue. So please definitely reach out to me if you want to discuss this further. Back to you, Kisle.
Thank you, Vikram. Thank you for covering employment-related issues. So we still have 9-10 minutes left, and we can possibly take some questions. Shasha, will you check if there are any questions?
Yes, before taking questions, we just want to thank Thai Silicon Valley for collaborating with us on this event. Thank you so much. So we have received some questions in the chat box. If you have additional questions, please feel free to submit them in the chat box in the Q&A, and we'll try to answer as many as we have time for. Our first question is for Gurshan. Can H-1B employees claim unemployment?
Yes, in most states, they do not allow H-1B employees to claim unemployment.
Kisle, back to you.
Gursan, go ahead, Gursan.
Yeah, most states do not allow H-1B employees to claim unemployment. Since to claim unemployment, you have to be free, able, and willing to accept new employment. And H-1B employment is tied to their employer. So due to these reasons, H-1B employees are usually not allowed to claim unemployment unless they make any kind of changes due to this COVID-19 situation. So far, they're not allowed to claim unemployment.
Thank you, Gurshan. We have another immigration-related question here. It is in regards to people that are green card holders. If they accept unemployment or any other type of government support during the COVID-19 pandemic, would that impact their ability to become a naturalized citizen either now or in the future?
In terms of the actual person, or in terms of the companies filing the perm? Sorry, I couldn't.
I'm not sure by the way that the question is worded.
Okay, in terms of companies, I know that that has been a question. If they take any kind of loans that are available to them, will their perm ability to pay change? Because one of the things you have to provide is an ability to pay these future positions, and for that there wouldn't be any kind of issues going forward for future green card.
Thank you. So we have a few questions on the Main Street program here. Firstly, one of our attendees is wondering, is it possible to apply for the Main Street program already? Are applications open, and do we apply through SBA?
So the application process is not yet open. There is, however, you can go and contact your bank, and they already have your information and they've already underwritten the other loans. There is some math to do in terms of calculating what you're eligible for. We can help you with that. I guess at this point in time, we're all waiting as to when the application process will open. It's not yet open. We do have a deadline of 30th September.
Wonderful, thank you. We have another question that has already been answered, but we would like to go over it in case the attendees haven't gotten the chance to see it. One of our attendees asked, I noticed that the PPP funds have been exhausted. Do we know whether there will be more funding?
So yes, there is, in fact, yesterday Congress and Senate passed a new bill, and there is a new funding of $310 billion, which will be available. So hopefully today or tomorrow, we should be seeing banks opening up, or, later this week, but there is a new funding round which is being added.
Thank you. And for another question, in terms of the loan eligibility, when it mentions 500 employees for the company, does that mean the whole company wide or any particular location?
I can answer this question. It's the whole company wide, and in fact, it may even include the subsidiaries. There's a few tests that's applied. There's one called the joint employer rule, and there's another rule about an integrated employer. So there's a couple tests that would apply, but you can just reach out to us and we can give you more details. But like I said, it not only includes the company-wide, but it could also include the company's subsidiaries based on how integrated the companies are.
Okay, thank you. And Kisle and Jyoti, if you could just clarify, add some additional information on this point.
Jyoti, go ahead.
Related to foreign subsidiaries.
Yeah. So as I mentioned on the slide too, right? So foreign subsidiaries are eligible to, all the foreign companies, who have US employees, they will be eligible for the PPP loan, provided they meet the eligibility criteria of having less than 500 employees within US.
Thank you. And we have another question related to PPP and EIDL loans. The person had asked, if we only have 1099 independent contractors and no W-2 employees, can we apply for PPP? And how about EIDL?
Sasha, I can take that question.
Thank you.
So the PPP loan is available only for the employees. So if you don't have employees and contractors, you cannot take the PPP loan, but you can apply for the EIDL loans. Thank you, Sasha. Sasha, back to you.
Thank you. We have some more questions here. Just one moment. We have a question about the use of the PPP loan. What are the eligible expenses? And if you use the loan for different expenses, how does that impact loan forgiveness? And if you only use part of the loan, can your full loan be forgiven?
Yes, so for the forgiveness part, the PPP loan can be used for payroll expenses, some of the payroll taxes, employee benefits, which includes health insurance, retirement contribution, rent, utilities, and mortgage interest. If the funds are not used for this purpose, then the remaining fund will be converted into loan after 8-week period, and that loan will be payable in 2-year period with 1% interest.
Thank you. And our next question here is for Asha Inamdar. Is there a timeline for claiming tax credit for employers? Can it be done after a few months?
Yeah, sure, Sasha, I'll be glad to answer that. Yes, I believe, Mr. Gajanan was referring to the employee retention credit under the CARES Act. As long as the period of the wages are after March 12th, 2020 and before January 1st, 2021, they can be claimed all the way on the second quarter of 2020. They cannot be claimed in the first quarter. So that's what about the ERC is concerned. But if he's talking about the paid sick leave or the FMLA, then again, the period of qualified wages is April 1st, 2020 to December 31st, 2020. they can be claiming it as and when that the wage period is covered. So that means you will have it all the way until December 31st, 2020. And if he's mentioning about the deferral of this payroll taxes, you can defer the Social Security and Medicare tax liability all the way until the PPP loan is forgiven. So even until the time the loan is forgiven, all those payroll taxes which have accrued till the time the loan is forgiven can be deferred in the two periods that I mentioned about, 50% until December 31st, 2021, and 50% for the next year after that.
Thank you, Asha. We are running out of time here, but we can go a little bit over. If we have any additional questions, feel free to submit them in the Q&A box and in the chat box.
If there are any unanswered questions, we will also be responding to them via email.
Yes, absolutely. If we don't get the chance to get to your question, we will also send that to you over email. Another attendee has wondered if you have a large amount of losses in your P&L, over $1 million, are you still eligible for these loans?
So depending upon which loan, if it is a PPP loan, that is purely based on employment. If you have employees and you are paying salary, then you can apply for PPP loan even though you have losses. Regarding EIDL, it will depend upon how the loan officer look into the balance sheet of your company. We have still not seen that. After the EIDL loan is filed, a loan officer will be assigned and he will be working closely with you. So depending upon the strength of your balance sheet and capability to pay back, the loan, EIDL loan will be granted.
Wonderful, thank you. It looks like we have gotten through most of these questions. Thank you so much for attending our webinar today. We will send out a copy of this webinar recording to everyone that attended the webinar. Feel free to review this slide for the email addresses of our panelists today, and please reach out with any additional questions. We would be happy to follow up with you afterwards.
Thank you, Sasha. Thank you all for participating in the webinar. I would also like to thank Thai team for arranging them and giving us an opportunity to present. Thank you, everyone.